Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here for Monday Market Moves, what happened last week in the markets, and what I expect for next week. And a little bit of housekeeping. Just got back from the New Orleans Investment Conference. It was awesome. I got to say, Rick Rule has a little bit of competition for the best conference of the year. Got in a lot of interviews. They're still coming. Been releasing one a day. We did Adrian Day last week, David Morgan, Lobo Tigre, George Gammon, Albert Liu, and Danielle DiMartino Booth, with more to come. So be sure to check those out. Alrighty, without further ado, let's go to the charts. Starting out as always with the S&P 500. Closed the week with a new all-time high, and why wouldn't it? So all of these charts, remember we ended the month and we did it over the weekend, so these are all monthly closes. New monthly, weekly close, all-time high, daily close, all-time high, 6,032, up 1.1%. The dollar rolled over and starting to go down, closed the week at 105.78, down 1.6% this week. I thought it would go up a little bit more last week, and it didn't. It just kind of obeyed this box right here that we drew a long time ago, and it's starting to go down. I don't know if we kind of get into a liquidity crisis. I think more people are going to be running into dollars, so our whole base case of the dollar getting weaker may not actually play out as planned. That was one of the things that we were talking about at the conference. And the 10-year yield minus the 2-year yield is approaching that zero line, so I think we're going to kind of repeat like back in the past. If I go back here, you guys probably already know what I'm talking about here. See how this, on this one in the great financial crisis, it went down below and then back up and down below and back up. You know, it kind of traded back and forth, and back here in 89, it did the same thing. Whereas this one in the dot-com bubble, it just shot right through. I think we're going to have a little bit more of a repeat of like the great financial crisis, maybe 1989, where this thing kind of goes back and forth for a little while before it finally decides to exit clown world and go into normal times. And 1-month treasuries still paying north of 4.5%, closed the week at 4.62. And intermediate government bonds are finally starting to turn up here. So now that I can see the future, I'd like to have bought more back here. I think we might be climbing up. The Fed has their next meeting December 18th, and 2/3 of traders believe that they will cut 25 basis points. The other 1/3 think that they will pause. So we shall see. But this is showing that they think that they're going to cut. And gold is down 1.2% for the week. Bias for next week is for gold to go up. Oh, and I forgot to mention it. I think that the S&P 500 will continue to go up next week, if not just kind of grind sideways. Okay, so bias for next week for gold is up. I do think we have more selling pressure in here. I don't think that we can really count this as a correction. It did come down to our first line, you know, and just for the record's sake, we drew this a long time before it actually hit it. So it did come down and hit that, but in my mind, that's not enough. I think we need to get back down here to like the 200-day moving average, maybe down around 2,400 before we can really, you know, say that we had the correction until we move up to 3,000. I do not think we're going to break this all-time high this year. I think it's going to happen in 2025. I think there'll be a little consolidation. I really hope there's more selling pressure in gold. But bias for next week is up. Gold divided by the S&P 500, gold lost 2.2% versus the S&P 500, but still just kind of following this general trend line up. And once we get above the 50% mark, then we are off to the races. CEF, physical gold and silver, is down 1.8% for the week. Don't see any buys here. You know, maybe just dabble in here on the yellow line here at 23.60. And then I think a good entry point for kind of a stink bid is 21.75. PHYS is down 1.8% for the week. Don't see any buys here either. RSI, all the technicals, middle of the road. decreasing volume, so we'll probably get a little bit of selling pressure here. First limit order 1950, second at 1875. GDX down 1.6% for the week. So I want to wait and see this hit the 200-day moving average again, or just to set it and forget it of $36 limit order. This one, that's all we did. We just waited for a couple of these setups. So look at the RSI when it got down there, when our entry point RSI was in the high 20s, and it hit right here on a rising 200-day moving average. That's kind of a sweet spot right there for a technical setup. GDXJ down 1.4% for the week. We could have bought, I suppose, because it's in this upward channel trend line right here, but I like to have multiple setups, so yeah, we did have lowish RSI. It was in the low 30s. We did have it hitting on this somewhat loosely drawn trend line here, but it did not hit the 200 moving average, so we want to wait for it to hit that before we click buy. Franco-Nevada down 0.9% for the week. I think this is pretty fairly valued. If you wanted to get some, this is the best gold royalty company on the planet, and it's fairly priced right now, I believe. If Cobre Panama comes back online, which I think is likely, this will get revalued overnight, kind of like it did back here, got revalued to the downside. But stink bid still at 115. Wheat and precious metals down 2.3% for the week. Kind of an interesting setup here. We might be entering into like a little head and shoulder pattern. We'll see if this irons out or not. First limit order at 58, second stink bid at 52.50. EMX down 0.6% for the week. So I think it's a pretty good buy right here where we are now. And then a stink bid in at $1.60. And Gold Royalty Corporation, got to see these guys out at the conference, still doing their thing. They're going to be having positive cash flow coming in here in 2025. So looking forward to that. I think this stock will start to re-rate going into 2025. I didn't draw the arrow, but I got another limit order in down here on this green line for $1.21. Although I think it's a deal now. So if you don't have any in this company, I think it's a deal now. I have a lot, and I'm being cheap. Origin Royalties up 3.2% for the week. So we got a little gift back here. It got down to like 90 or 91 cents. Hopefully you guys took advantage of that. Nothing's broken with this company. It's still fantastic. I think pretty much anything underneath this green upward channel trend line is a deal. Although we got a super deal down here, I would, if you're like us and you've been buying these because Rick Rule told you about them a couple of years ago, I think that anything now is a deal. We still got a lot of room left to go in this one. Just waiting on the Altius a decision to come in, and when it does, then we'll find out what the true price of this is. And Empress Royalty, this is a new one, down 2% for the week. I got to meet these guys out at the conference, or I should say the ladies. I'm going to get Alexandra on the show. She is the CEO of this company, so I placed first starter position, got in at 24 cents. Did that on Tuesday. Got a stink bid in down here for 20 cents. This is a super small, not quite as small as Maduro, but 28 million US. They've got 4 producing royalties, so very risky, but also high risk, high reward. So with only 4 royalties that are paying right now, if any one of them goes out for whatever reason, this thing's going to re-rate pretty quickly overnight. But also, could be a lot of potential here. I mean, they've got some cash flow coming in that is pretty impressive for a company this size. So more to follow. And Barrick Gold down 4% for the week. So you guys remember on the run-up, we took some profits, then we had a nice little sell-off here thanks to the Mali government and trying to swindle Mark Bristow out of as much as they possibly can. And we had a re-rating. So we shall see once that resolves. But I think, any buy around in the $16-ish range, I think is a pretty good deal. Assuming that gold holds this level of where it is now. And Newmont down 3.3% for the week. We're below the 200 moving average, but look at that RSI. Look at how sold off that got, down to 21. You don't see that very often. That's where the first yellow line was drawn. $40.50, I think, could be your first order. And then after that, $38.45. And Agnico Eagle. Okay, so this one is pretty exciting. Up 0.1% for the week. So this is my favorite gold miner on the planet. And it's 2% of the portfolio, and we're past the point of concern, which means we got it for free now. Now, I think this is ironing out to be amazing right here. So we got a cup forming right here. If we can get a handle, and if we get downward pressure on this stock that does not cross the $69 range right here, that would be a perfect retracement of 38% on the handle portion of this, which is going out, this just the cup portion here took 4 years for this to iron out. Maybe it takes another year for this handle to iron out and just going down. And if it were to touch right here, this is where I would be loading up. But, again, I'm a little biased because my cost basis on this is 0. But that's where I'll be looking to add if we get down to that. So Agnico Eagle. All right, and B2 Gold down 1.4% for the week. So I placed an option on this that doesn't expire for over a year. Just really hoping we continue this Charlie Brown shirt pattern up and down. And once it gets up to about this white line up here, $3.40, we'll be exiting the option. And Equinox Gold down 0.9% for the week. We'll be seeing what Ross Beatty does in the little shake up here. We are above the 200 moving average, and I think basically any ads here, like kind of along this white channel trend line, are I think are pretty good buys. G Mining Ventures down 1.4% for the week. Okay, so you guys, last week we had this at $7.75, so that was your first limit order that hit. Next one down here is going to be $7.20, and then a stink bid in for $6, although I don't think that will hit. And Rio 2 down 4% for the week. So we had our 46-cent limit order hit, which was fantastic. Had a little bit of selling pressure here. I'm really hoping we get some more selling pressure in this. Got our final limit order in here for 38 cents. They're starting construction. They got all the financing they need. This thing should be in production in about a year and a half. And, but while I'm thinking about it, next week we have a guest coming on, Danny of Capital Cosm. So excited about that. He has a YouTube channel, a lot like ours, interviewing a lot of the same people we're talking to. There's Doomberg, John Polemy. You guys can see all the guys here. Patrick Kareem, Lobo Tigre. So a lot of the same guys we're talking to. And his channel's really been taking off. He's been doing this full time now. He's got over 23,000 subscribers. So be sure to submit your questions under the community tab on our channel. So just go right up here, click on community, and then there'll be a post right here for submit your questions for Danny of Capital Cosm. So thank you. He's a chart guy. He's a commodity guy, and he's got a software background, so he can pull up Google searches and use AI to find patterns. So I really like talking to him. So help me out, get your questions in, and I want to deliver what you want to hear. All right, and silver is, where are we? Down 0.7% for the week. So possible head and shoulders ironing out right here. So let me draw it here so you guys can see. So here's the left shoulder, then the head, and then the right shoulder. If we break down on this, this has me slightly nervous because, let me do the measured move here. So we take the top of the head down to the neckline right there. We get about $5. And so if we take from the neckline here and go down about $5, that would bring us below 26. So that'd bring us down to about $25. Don't want to see that because there's a lot of support around 26. If that got broken, we're going to have a bad time. Now, I'm not totally certain that this is a head and shoulders pattern. I haven't seen any other TAs talk about this really. So that's kind of making me think that I'm missing something. If anything, it looks like this is angled down a little bit. And if head and shoulders is angled down, then it's kind of negated. You basically want it to be going sideways or angled up. Unless it's an inverse head and shoulders, then you do want it angled down or sideways, but you don't want it angled up. So a little bit of nuance there. But if this is an inverse head, or if this is a head and shoulders pattern, we could be looking at some pretty good downside for silver. So, I don't know. Tell me what you guys think in the comments below. Not sure if I'm missing something or not, but my bias for immediately for next week is going to be up. And gold to silver ratio is now 86 to 1. 86 ounces of silver will get you 1 ounce of gold, meaning that silver is incredibly cheap. All right, so pay attention to these kind of like, head and shoulders patterns going through these silver stocks here as we go through them. So you can see the same kind of pattern right here for SIL. Okay, I like this one a lot for, an easy bait away in your guys' retirement accounts to play silver. This one is up 0.8% for the week. So I like buys here on the yellow and green lines, $35 and a stink bid in for $31.50. SILJ, so we got back into this one after selling some at $11.76. So look at this rising 200-day moving average. We do have some decreasing volume here. So this is kind of making me think that this thing is going to be moving to the downside. So you can get your first limit order in for $11.50 and then maybe another one down in here for like $10.50, $10.25, somewhere around there. But RSI is getting pretty sold off here. So I think our entry points here are going to be sooner rather than later. And Pan American Silver is down 2.7% for the week. Possible head and shoulder pattern here as well. This one looks a little bit better to me than the straight up silver one. I got a question from AMP. You mentioned something about Pan American Silver in December, $19. And I don't know if you meant like an option with the strike price, like a put on Pan American Silver with it expiring in December, or if you're just asking me like, do I think that it'll get to $19, this green line, sometime in December? If that's the question, I don't know. I don't know. I think it'll probably go up on Monday. That's about as much as I can tell. Anyone that tells you they know what's going to happen beyond 3 days just by looking at these daily charts, I would challenge that. So when I'm saying I think it's going to go up, I'm talking like Monday, Tuesday, possibly Wednesday, and then after that, it's anybody's guess. But it does look to me like it's probably going to, I'm just saying that because on silver, it looks to me like it's going to pop, like it's going to go on Monday. But when I go to this one, it actually looks like it's going to go down now that I zoom in on it here. See how you got the this downward 20 moving average? So it hit on that and then bounced right down. That's not a coincidence that it hit that level and went down. This one actually looks like it might kind of go down on Monday a little bit. And then the first level of support here is going to be around 2142 or so, 2140, something like that. So if that's your question, AMP, if it's going to get down to 19 in December, I don't know. But if it does, I will buy. And Fortuna Silver Mines, down 3.8% for the week. I think anywhere around this rising 200-day moving average would be an interesting place to buy. It just seems to obey this 200 moving average. Look, it's hit once, twice, 3, 4 times. If it hits a 5th time, it's probably holding. And Silvercrest Metals, okay, down 1.4% for the week. So when I was out at the conference, I sat through their presentation. They gave all of us a silver coin and a really nice breakfast. It felt a little bit like they were bribing me with my own money by giving me the silver coin. So we're all essentially owners of Core Mining now. So they're getting bought out by Core Mining. I was talking with one of the guys there, and he said, on principle, you should probably just sell when one company gets bought out by another, and you don't really know enough about the other company, which is exactly where I'm at now. I don't follow Core. I don't really know anything about it. We're doing a Q&A with Rick this Thursday. I'm gonna pick his brain again on this merger and see what he has to say about it. But everything I own in this is free now. Thank you to the Rural Classroom. So if you want to hear more about companies like this one, join us in the Rural Classroom. Rick turned us on to this one over 2 years ago. Look at that. January 2022 was the first entry. And it's loads of free content in the Rural Classroom. We've got almost 10,000 members strong and growing every single day. And after that, if you're a serious investor, join us in the Rural Classroom Plus, where you get a much more personalized experience. And your fellow students are, we're going to call them the Honor Roll. They're in the Honor Club, a super smart group that I'm honored to be a part of. Rural Classroom Plus is $29 per month. That is going up soon. And when you think about how much you're betting on these companies, that is basically almost free. Rick and I will be doing another Q&A this coming Thursday. Links are in the pinned comment below. I hope to see you there. All right, so this is the company that is buying them out, or essentially merging here, Core Mining. I'm going to have to start studying this one, or once I get Rick's opinion on it on Thursday, then I'll know whether I'm just going to bounce out of Silvercrest or basically hang on and become an owner in Core Mining. And when I went to this meeting on Silvercrest, they really couldn't comment too much on the merger. They said they're kind of in a blackout period and they're not really allowed to talk much about it. So it was basically get your silver coin, have a nice breakfast, and that was it. It wasn't a whole lot of talk on it. Okay, and Endeavor Silver is down 5.6% for the week. So this one is super leveraged to silver. I think they just did a dilution. First level of support here is going to be around $4, and the next one after that will be around $3. And also this rising 200-day moving average, which right now is $3.48. But I don't see any real buys right now. See, we want to see this RSI get really sold off. See, like how it got sold off back down here to 25. And look at that perfect entry point right on the 200-day moving average. If this gets down to that 200-day moving average, you'll probably have a similar setup. And copper, paging Dr. Copper, is up 1.3% for the week. So bias for copper next week, I wrote down, but now that I'm looking at this, it might actually be up. Okay, so I'm a little torn here. It looks like we're coming up to a bear flag. So let me draw this out for you guys. So we went down right here, and then you kind of got a flag pattern going like this, which means that if it plays out, you're going to have a downside of, 50 cents or so to the downside. So that would bring it down around $3.60, something like that. Now, got to say, Blaine, thank you for bringing it to my attention. We have the Sprott Physical Copper Trust. So these guys were able to get a warehouse full of copper so that we could bet on it. This is the chart of on the TSX of what it looks like. So it's just been getting cheaper. And this is the over-the-counter one. And Blaine pointed out that we are now at a 12% discount to net asset value right now in the over-the-counter and also in the TSX. So now, very... Pay attention to this part, okay? Look at the volume on this, okay? Volume is right up here, okay? On Friday, we had 100 shares being traded over the counter, okay? So that means like $730 worth of trading activity happened on Friday, okay? I mean, the volumes on some of these days are just ridiculously low, so limit orders only. Look, one guy got in down here at $6. He probably had a limit order at $6 and someone did a market and it just sold. Hopefully there's no one watching this show. But look at that. Only 265 shares traded that day. And I bet someone pushed market and someone had a limit order in down here for $6. And look at that, that guy got lucky. Okay, so limit orders only on this thing. And let me share my screen here, and we're going to go to the Sprott Physical Copper Trust. And we can see right here, pretty impressive, okay? So this is the share price, but this is what it should cost, you know, because copper right now is at $4.12. But it's trading like, you know, if you buy it through this fund, I did the math earlier, and it's trading like it is $3.62 a pound instead of $4.12. So pretty cool. And also this seems like a bit of an anomaly here. So this thing only IPO'd like, you know, less than 6 months ago. But look at this. Okay, so right here, this is the share price. This is the net asset value. And we can see that it just traded at a premium. I remember I was tracking this, and then I was like, you know, this doesn't really seem interesting to me. You know, we're not getting much of a discount here. And then I just stopped looking at it. And thank you, Blaine, for bringing it to our attention. But look at what happened here on November 11th. One guy must have just sold and got out. And since then, we've just been trading at a massive discount. So I'm having a hard time thinking of things that I like better than things that are on at a good deal. And I can't think of one right now that at all. So we're at a 12% discount right now. So let me go back to Trading View. I think we're going to print money on this, boys and girls, just like we did with the Sprott Physical Uranium Trust. Now, what we need to watch on this is we need to watch copper, okay? And do we think that copper is going to go lower? You know, essentially what we can do is we can buy this down here at $3.62. So do we think that copper is going to go lower than that during the recession? I don't know. I mean, that is a compelling level right there. I think that this is worth a buy now. Okay, now this fund is only worth, I think, like 93 million or something. Let me look here real quick. 93 million. Yeah, so it's not, you know, it's not a very big fund. You know, it's bigger than some, but it's not huge. You know, so limit orders only. But I don't know. I think this is worth a buy now. And then as weakness comes in, if we continue to have that that discount, then I think this one could be pretty good. So I think on Monday, assuming the discount is still down around there, I'll pick up some copper for $3.62, and that'll be the first order in there. And then if this trend line is broken, which I think eventually it will be, especially going into the recession, it'll probably get cheaper. Hopefully that discount gets to be more and more. And basically we can look at this as a way to store some of our cash into a physical commodity. All right. Moving on to the miners. COPX is up 0.1% for the week. So some of your limit orders here were first hit on $42. Stink bid in down here for $39. And COPJ, the junior copper miners ETF, almost hit the first one at $21, came within pennies of it. You know, you could be buying on this rising 200-day moving average, which no one would knock you for that. But I still think we're going to have a little bit of a hit here coming into the recession for the copper miners, and that's where we can really load up. Freeport is up 1.6% for the week. So your first limit order hit there for a hot minute at around $42. And next one is going to be, actually, you know what? I think I moved that down a little bit, but that's going to be the limit right now, is around $42. And then the next one after that is going to be 40, which would line up for perfectly right here with this double bottom. And then there's quite a bit of back support back there. Arizona Metals up 21.5% for the week. So if anyone knows what happened, I didn't see any press releases. I know Peter Granish said that they were doing a conference, I think, up in Canada somewhere, maybe it was Vancouver, and Arizona Metals was doing a presentation. So maybe this is just some of the buying that took place from that conference. That's pretty typical of what happens at these small mining conferences. Is you know, people find out about these companies and they buy them, and then the share price goes up. But great to see it above the 200-day moving average. You know, hopefully we'll keep up there. And Maduro Capital up 3.3% for the week. Still like entries here around 12 cents. If you don't have anything in this, we're basically waiting on a wonderful drill hole from BHP to re-rate this stock. And uranium. So bias for copper next week is generally down. And uranium is down 0.6% for the week. We had the Russian news come out. Bias for next week is going to be up for uranium. Uranium divided by gold, still historically cheap. I think that uranium is very, very cheap compared to gold. If you've had a nice run in gold here, if you want to swap some gold for U308, I think now is a pretty good time to do it. And the Sprott Physical Uranium Trust is down 3.4% for the week. We are up to 66.2 million pounds, trading at a 4.13% discount. So not quite the amazing discount that where we want to start buying this thing. North of 12% discount is kind of like my kindergarten method of playing this thing. Kind of where the copper the copper trust is right now. Would like to see this get sold off a little bit more, maybe even go below this white channel trend line right here. And CCJ Cameco down 1.1% for the week. No buys right here. If you're a trader, I think now is a pretty good time to trade. I know a lot of you guys got in down here around $35, $37. You've had an amazing run here. What is that, 80 something percent? Not quite that, 65%. Maybe trim, maybe move past the point of concern. Yeah, nice run, but super high technicals. I mean, you got an RSI of 63. One thing that does concern me a little bit on this is, once you kind of get this RSI, see, we just had a peak there and down. I think we might generally be starting to roll over on this. We'll see. And Kazatomprom is down 0.6% for the week. I exited my position maybe a month or so ago. This one's just a little bit too risky with management constantly moving in and out. And, it's just a little too risky for me. Besides, I got a lot of URNM, and about 15% of that is Kazatomprom. URNM down 2.8% for the week. So if you don't have any of this, I think a first limit order around $45 is pretty good. But anywhere along this green upward channel trend line, I think would be great entry points, good stink bid, which if it gets down to there is around $40. And URNJ down 2.9% for the week. So the last bull run that we had on this was 125%. And we had that really nice correction where we were able to add to our position. Got all the way down into the 17s and 16s. Now it's floating around the 23s. I don't see any buys right now. We want to see some more selling pressure on this. But I fully expect that we could have another run like that 125%. From those last entries, I mean, we're already up, what is that, almost 40% right there. We had a point where we're up 60%, so taking profits up there wouldn't have been terrible. URNM divided by uranium itself, so the miners underperformed by 2.1%, and the juniors, URNJ, divided by the two majors and the Sprott Physical Uranium Trust, is the juniors underperformed by 1.6% for the week. UROY, okay, still floating around that $2.50 mark. We just had an interview with Scott Melby of Uranium Energy Corporation. That interview is coming out, next week. I can't remember exactly what day it is that it's coming out, but it's scheduled and coming out. So stay tuned for that. But just sitting right here on the $2.50 mark, just right around this 200-day moving average. Unfortunately, the 200-day moving average is sloping down. We got decreasing volume, so it does look like it's probably going to go down a little bit. And some people watch the Qs. We watch the Us. It is up 4% for the week. So blew through our resistance line up here of $7.10. We're going to have to move that up again. Where is a good spot to move that up? Maybe around there. 770. 775, somewhere in that ballpark. There's quite a bit of price action and just topping right there around that range. So yeah, 775, 780, something like that. But pretty high technicals on this, so certainly no buys right now. And Uranium Energy Corporation down 1.8% for the week. So Scott and I also talked about this one, but really stretched in the technicals here. And, like I said this last week, if you're one of these guys that got this, around $4, you've had more than a double. I mean, in a short time frame since September. Okay. Nothing wrong with moving to the point of no concern, right? I mean, that is incredible. And that's what I love about the uranium sector is it is so volatile. You can have doubles like that in just a few months, and you did. So, let me know if you guys are going to the point of no concern in the comments below, because I love seeing that, and I really think this is a perfect example of where you could do so. All right, and crude oil is, where are we? It is down on light crude oil. WTI is down 4.6% for the week. So getting a little nervous because we're hanging out so much right around the $68 to $67 range. Bias for next week is down. Brent is down 1.1% for the week. If George Gammon is right, then this is going to, crude oil is going to get cheaper. And our gold divided by crude oil is up 3.6% for the week. So gold is outperforming crude oil. It now takes 39 barrels to buy 1 ounce of gold. And XLE, okay, so this had quite the gap up here at the beginning of the month. Probably going to fill that gap, so we might get some more opportunities in here on XLE, which would be awesome. And ExxonMobil is down 3.4% for the week. So this one's also getting exciting. We got the rising 200-day moving average right here. Best oil company on the planet, according to Rick Rule. And yeah, I'm super happy with this one. Really, really like it a lot. They pay a fantastic dividend. It just went up, and just caught a perfect double bottom right here. I love this software, TradingView. I don't know how you're going to catch these double bottoms like this without this software and, catch the tops of when to go out. And I really don't think you're going to. I don't think it's possible. I don't know how you do that without looking at a chart. I know a lot of you guys got in on their Black Friday sale. I did too. I renewed my annual membership and I got the top tier version. If you missed the sale, no big whoop. You can still try it out for free. My brother's been using this software for years now and he hasn't paid a dime. Now, he doesn't have all the cool indicators that we do, and he can't draw all these moving averages and trend lines and stuff. But still, if you're just getting started in technical analysis, this is where you begin, and you can do so for free. So try it out for free using the link below. And thank you guys for doing so. You're supporting my family and my work when you use that link. And there's no obligation. If you don't like it, well, it was free. And Chevron is down 0.3% for the week. We're getting way oversauced in this thing. That's technical jargon for overbought. RSI is 63, so getting way up in the clouds here. We got a gap back here that's probably going to fill. Is ironing out for a golden cross right here, but I don't think that's going to play out just because the technicals are so stretched. So I'd be looking to see this roll over and probably limit orders down here around 148 and then a stink bid at 135. Occidental down 2.6% for the week. So this is Warren Buffett's favorite and got pretty decent support around $50, although it does look like it's kind of grinding sideways. And I am a little concerned on this, and I just mean oil in general, because Berkshire Hathaway has about 30% cash right now. I checked their market cap of Berkshire Hathaway and it was over $1 trillion. Not much over $1 trillion, but they got like 300 million in cash. So that's about a 30% position in cash. If oil is a great buy, why isn't Warren Buffett buying more? I mean, these companies have enormous market caps. He could certainly, buy up a few percent of this thing to get something invested in it. I mean, 500 billion market cap for ExxonMobil. Like he could throw, 10 or 20 billion in there and not affect the price if he does it over several weeks. Why isn't he done so? What maybe these are overpriced. I don't know. I mean, they look pretty cheap to me, but if George Gammon's right, and another thing too, like the more times that, okay, so this is WTI right here, the more times that the price action touches this same point, it's kind of like a needle bouncing ever so gently on a balloon. Eventually, if you bounce that needle on the same point enough times, the balloon is going to pop. So the longer we stick around this level right here, the more nervous I am for oil to break to the downside. And the next real support down here in oil is going to be around $50 to $55. So that would be a pretty big hit. All right, moving on. Blackstone down 0.3% for the week. I think limit orders in, what do we do here? There we go. Limit orders at $14.75 and $14 stink bid. And freehold royalties down 3.5% for the week. So fantastic dividend. If you get in at $13.50, that is an 8% dividend. They pay you 9 cents a month per share. If you get in at $13, that is an 8.3% dividend per month. So this one is best, I think, for Canadians because it's on the TSX. Natural gas is up 7.5% for the week. Pretty incredible. I think it was up. Let me double check this. Yeah, up 7.5% for the week. Bias for next week is up. Now some deals coming in here. So we got some deals on Devon Energy, got a little bit cheaper. They did have a decreasing dividend, so I think that may be some of the reason why this is sold off a little bit. However, they're buying back shares. So in my mind, that's kind of a wash. They had a little bit less of a dividend, but now there's fewer shares available. So each of those shares are slightly more valuable. So I think Devon is a screaming buy right now. Woodside Energy had a picture perfect double bottom right here. It's down 1.9% for the week. If you're going to get into this one, I think 1550 is a decent level. And Birchcliff is down 2.4% for the week. I think we need to be adding to natural gas right now. I think it is a steal and probably going to get cheaper. Okay, so I just did the math on the dividends for this. It came out to 0.292 cents per share per year. That came out to 8.2%. If you bought right here like we did at $3.55, that works out to an 8.2% dividend. So fantastic dividends for these companies. And Pado is down 2.8% for the week. So limit order in here for 1065, which we missed by like 7 cents. That was a little frustrating. And then a stink bid in down here for $9.75. And corresponding dividends, 9%, 9.6%. I think this is, we get paid awesome rent while we wait for the arbitrage in natural gas to play out, which it inevitably will. Thermal coal is down 3.6% for the week. Bias for next week on that one is up. And met coal is up 0.1% for the week. Bias for next week is up. The coal ETF. Okay, so we finally had it around long enough. We've got a 200-day moving average now. That's exciting. First bid would be $22.30, just lining up with some back support right back here, maybe $22.25. I think would be good for a limit order, and then a stink bid down in here for $20, and I've got what I call a super stink bid in down here for $18, which will probably never hit. And Glencore, okay, like this one, a lot of political risk, but I think if you can get in pretty cheap, $9.40 is the mark that I like, and I think it will hit. And AMR is starting to catch a bid. So that one was flat for the week. Still got our stink bid in here for 186 per share, but RSI and stuff is pretty overstretched, so I don't see any entry points right now. BTU down. What happened to it? There we go. BTU down 13% for the week. So thank you, Matt Warder. We ran 2 puts on this. We should have talked about, yeah, we did talk about this last week, but we hadn't sold them yet. Sold them on Monday. So we had a 1-week put, which we got for a 26.5 strike price, made 625%. So that was awesome. Then we had a 1-month put that we sold on Monday. We only held that 1-month put for, over the weekend, and that sold on Monday, made 300%. Really regretting selling that 1-month put because it just continued to go down. But, I was talking with my trading partner on that, and he's like, whatever, you never know. I could see straight looking backwards. But yeah, this one was awesome. I think I know how Nancy Pelosi feels now. But yeah, this was pretty cool. This paid for the conference. This was less of a technical bet as much as it was, that BTU won the contract and, in the short term, kind of overpaid for it probably. And the stock price got hit. So now we're going to be looking to continue that money hack, and we will be looking to probably run a call on this thing. I don't know that I see a call right now. So what I'll do, like when I'm running these options, is I go out to the hourly, then I go to the 30-minute here. You want to get down to the nitty gritty here and really see where you can, oh, what's that look like? Oh, that's interesting. Yeah, we'll see. I'll get into the weeds later on in that. But yeah, I'll be looking to run a call on this. Maybe next week, maybe not. I probably want to see the daily RSI get sold off a little bit more. All right, and platinum is down 2.2% for the week. So hit our little yellow line right there at 936 and then bounced up. I think platinum is pretty cheap right now. PPLT, same kind of thing. Your limit order for 85, which you've had set now for months, has finally hit. So congratulations, you are now in platinum. Your stink bid will be $80. And palladium is down 2.9% for the week. So just hitting right here on this 200 moving average. Your first bid down in here around $900. I kind of like that level quite a bit. So bias for platinum next week is up. Bias for palladium is sideways to up. And the PALL, same kind of thing. I think a limit order around 85 and then also one around 80 would work. Got let's see, in the live chat we had Kesnika. He was saying SPPP is looking pretty cheap. He doesn't have any yet, but he was wondering where some entry points would be. Okay, if it were me, sir, now I'm already pretty positioned. I think I've got, I'm putting myself on the spot. I think maybe 2%, maybe 3% of my portfolio on platinum and palladium. Some of it through SPPP and the rest through PPLT. If I didn't, and I wanted to make entries into this, I would bet probably 20% at $9.40. And then I would probably bet 30% at $9. And then I would bet 40% at $8.75. Now that's just lining up with these two little back ones right back here. And then I would do a final 10% right down here at like $8.25. And you go, well, why would you only do 10% when it got the cheapest? Because I think the odds of it hitting down here at $8.25 are pretty low. Okay, I feel very confident that it'll hit $9.40, and then I feel pretty confident that it'll hit $9, and I feel semi-confident, that it'll hit $8.75, and I don't feel very confident that it's going to hit $8.25. So at least you get 90% of your bet in most of the time, and then if you do happen to get lucky down here, maybe when it does reach that point, you might ask yourself, well, maybe I don't want 1 or 2% of the portfolio to be platinum and palladium. Maybe I want it to be 3, and then you can essentially double down or whatever you want. But at least if you get those limit orders in and you have a rapid sell-off one day, they'll trigger, hit, and you get them in. All right, man. Hope that helps. And platinum divided by gold is getting historically cheap. We can just darn near trade 3 platinum coins for 1 gold coin, and platinum divided by silver is historically cheap. speculation at its finest, but I traded a bunch of silver. Well, not a whole bunch, but maybe 10 or 12% of my physical position and silver with Andy Schechtman. Mailed it off and got some platinum coins. So I've got some platinum maple leafs now. So this is super risky. I literally traded pure money for an industrial metal. But I think that platinum is pretty darn cheap. I mean, like, look at this here. Like, when has it been this cheap? It hasn't. Okay. So even if we just, get back up to 60 to 1 right here, I can get back twice as much silver as I gave. Now how long is that going to happen? If we're going into a recession, catalytic converters are probably going to get hit because less people will be buying cars. So super risky, but if you want to do the same thing, I love Andy over at Miles Franklin. As far as service is concerned, they're top notch, they're insured, gets delivered in a discreet package that requires your signature to receive them. So email him info@milesfranklin.com and please tell him In It to Win It sent you, and you will get your physical precious metals today. Nickel futures are down 0.5% for the week. So it looks like we're kind of grinding out like a little bit of a bottom right here. We got a 1, 2, 3, and 4, a quadruple bottom. Bias for next week is slightly down, although probably not very far. NIKL down 1.4% for the week, so still like a limit order of $11.50. And Centaurus Metals, this is about as risky as it gets when it comes to bets, is a company that's trying to build a project down in Brazil, but if they do it, this is going to be a long ball home run. I like a stink bid of 21 cents. And, if you really want to get into this company, I think right now is a pretty good price. It's just hitting right on this 200-day moving average. And iron ore is up 3.3% for the week. Looking great. Bias is up and playing that through BHP. So this one got all the way down to 51. We're looking at an option to run on this in BHP. We ended up not doing it. We're looking at it right here on Tuesday. And everyone else saw the same thing we did, so the options were just way too expensive because everyone saw that it was going to do what it ended up doing, was going up. Rio Tinto is up 0.8% for the week. Same kind of thing. Limit orders down here at $60 I think are prudent. And the PIC ETF is up 1% for the week. So first limit order hit here week before last at $38.50 or so. Stink bid should be $36.25. Fertilizer, Nutrien is down 0.6% for the week. I think a limit order of $45 is good. And Joe wanted to know about CVR Partners. So this is another fertilizer company. And to his credit, when he asked me about it, it was down here at $70. And it just shot up. I'm not sure what happened with this. I didn't look into it. But I think some fund, a guy, Carl Itchen, bought some. So maybe that was what boosted it up. Certainly no buys now. I got a stink bid down in here of $65.10. And I just got into the weeds, just going way back here to some back support. But way stretched in the technicals now. I'd like to see it come back down. But as far as like level entry points, I know you already got some here at 70 or 71, Joe. And something to be said when it has re-ratings like this, is taking a little bit of profits. Maybe take a little bit off the table, pay yourself, right? You were right, amazingly fast, amazingly fast. And, pay yourself a little bit and then maybe some limit orders in down here, just lining up with some back support, around... well, you already got the $70 level. I like this one a lot. I like 65 quite a bit. And Bitcoin is down 1.6% for the week. So I think we're getting a topping pattern here. So we had the bull flag breakout, right? I think we're going to retrace back down here. So if you caught this breakout and, you got it up to 100K, now's a great time to take those profits. And then you can re-enter when we get back down here. 76, maybe 78,000, kind of like right where it hits this white trend line. It looks like Bitcoin is ready to roll over. And when it does, then you can pick up some more when it gets back down here. Here's some quick ones. So bias for next week is down. Here's some quick ones I just want to throw out there as possible options trades that look kind of cheap. So this is Bloom Energy. They had an immediate re-rating here. So usually when charts look like this, they don't last forever. So we're looking on some puts on this one. Also looking at this one, possibly PDD holdings, possibly coming in for a double bottom here. So you might be able to catch an option on this to the upside once we get down just a little bit more. And then Energy Transfer, this one shot up. The one thing I don't really like about the options on this one is this is kind of like a steady Eddie slow mover. You know what I mean? Like it doesn't have real violent moves like uranium does. But usually when you get stretched like this, you have some kind of correction. And then this one, especially Urban Outfitters, I mean, look at that. That just gapped up from $40 all the way up to $45 and then closed at almost $49. And on top of that, we're lining up with a lot of resistance coming back here. So there could be some put options here for that one. If you want me to review your company, get some quick fundamentals, there's a donation tab in the notes below. Thank you guys for always being here. Be sure to check out the Rule Classroom. Rick and I will be doing a Q&A in the Rule Classroom Plus on Thursday of next week, and get your questions in for Danny at Capital Cosm. Thank you for being here. Be sure to support the show and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.